Hey everyone, it's Evan here from The Trade Risk on Friday, January 19th, here with a weekend market recap video. I feel like it's been forever since I've done one of these, or at least the live video part of this. Been traveling around and doing some different things, just busy schedule recently. Have been pretty slow on social media and posting, so hopefully I can change that around, update you on my thoughts in this video about markets. Specifically what we're going to be looking at here, we got stocks that get the S&P that's already up 5% this year, Qs 7% this year. It's only been a couple of weeks of trading and we're already on track to post some stellar gains super early, but bulls very clearly dominating in early January 2018. We get the highest weekly momentum reading in over 10 years. So since the lows in 09 when the market washed out, bear market bottomed out post the financial crisis, we are actually at a point at which we are making new momentum highs. We'll talk about that. And we have semiconductors, which are breaking out after a almost 10% pullback just last month. We are now back to new highs in semiconductors. So we're going to talk about all this and some more right now. All right, let's kick things off here with the S&P 500, the SPY ETF. You can see we finished up 45 bips here on Friday to finish the week right at highs. That's good for 1.27 points in the S&P 500 SPY ETF. Before we look at that daily chart, let's take a look here at the weekly. Let's get that big picture in our head here before we drill down into the day-to-day noise. We finished up 2.5 points here for the SPY. That's almost 1% on the week. And take a look at just how accelerated and how strong this trend has become, or really ignited throughout 2018. Now, at the top of the video, I mentioned that momentum was at new highs here, going all the way back to 2009. That's as far back as I can easily get on TC 2000 right now. And if we look here at the bottom indicator, I'll make this big right now. This is the MACD. So this is a momentum indication between two moving averages. It simply takes the distance between a shorter term moving average versus a longer term moving averages and plots the difference. In my case, I'm looking at an 8 and 20. That's not the standard. You could switch it to get some slightly different settings. The numbers aren't necessarily important here, the 8.49 reading that you see. It's really just the character here of the MACD, where going all the way back to 2009, you can see, generally speaking, momentum peaked right around this 4.5 or really 5 level, going all the way back almost 10 years. And you can see today it's nearly double that, which basically says the acceleration to the upside is even more stretched than it ever has been in basically throughout this entire rally. Now, the interesting thing about momentum is it's basically, I've never seen it as a bearish study. It's always a supporter of price, right? So having strong momentum, having new highs in momentum is always a bullish characteristic. It doesn't mean you can just buy without without any strategy, or that you can just close your eyes now and load up the boat and you'll be fine. But generally speaking, it is supportive of a market rally, an indication of higher prices to come. If we go to, and we'll finish that thought in just a moment, but if we go to the daily chart, you can see again, MACD is at highs here. And generally speaking, as we say, momentum peaks before price does. So for example, if we were to look at momentum and we just zoom back here to 2016, and there's many more examples, but I think 2016 illustrates it just cleanly. If we zoom out here, we look at MACD, we say, okay, look, we're making new highs here in MACD, and you see that the MACD actually peaks before price actually peaks. So you got a high in momentum, but then you see price continued on for the next several weeks to make new highs as momentum started to decrease. That's generally what you see. So as we stand right now and we look at this market, we're still seeing momentum make new highs. Therefore, it's tough to be a super bear right here. I think it's totally reasonable to expect a correction. I'll get to the second half of this argument, the bear case, if you will, or a pause. Careful on that word correction. But with MACD still making new highs, it's tough to be super bearish here. Now, the flip side of that argument, that's the bull case. We spent a few minutes talking about that. The trend is strong. Momentum is really strong. When we think about the flip side here, we also have to think in terms, especially if we're trading and we're making active decisions on risk versus reward, you have to remember that we did just cover a lot of ground. Momentum making new highs does not necessarily mean that we can't have a 2, 3, 4, 5, 6% pullback that starts on Monday. It totally can happen like that. And that's something that we as traders need to think about when we're looking at a market that is covered, nearly 7%, so, or 6.5, whatever the number is right now, in just 3 weeks' time after a 20% year just in 2017. So the way, and so to follow up that thought, the one other sort of school of thought here is, because this sort of has crossed my mind, is this terminology, which I don't necessarily use, but often myself, because the definition is important and everybody has a different definition, but is this concept of a blow-off top. And a blow-off top simply says, after you have an extended rally in place, a blow-off top is such that when you get an acceleration in that slope, so an acceleration in price to the upside after a long rally, that can indicate that we are actually at an exhaustion point. And what you'd see at the end of a blow-off top is basically price topple back down as fast as it went right back up. So could that be a scenario too? Absolutely. Yes, it could. And, I'm not here to make predictions. I'm here to just point out different scenarios and give you some frame of context about what this market actually looks like and what it's actually doing. And I think both of those cases are, have some merit to them, that this could be entering into a phase of some type of blow off top. The question becomes, when does it end? Are we just starting it? Do we have another 2 months of it? How much higher is MACD going? So, those are all strategy specific questions that I think you would need to address depending on how you're actually tackling this market. But I think when we look at the framework, the actual structure of the market here, trend remains strong, momentum remains strong, breadth softened up a little bit in the middle of this week. We started to see, for example, the number of stocks hitting new highs started to pull back just a little bit off highs as the S&P 500 still sits at highs. I believe that is the case right now. We don't have the NYSE AD line quite at the highs, but I'm being very particular here. It did rebound a little bit today on Friday. So I think this all sort of boils down. There's a long-winded way of basically saying there's a lot to like right now in the market. There's a lot of evidence still supporting the bull case, but it doesn't mean you should, be getting complacent or buying blindly and just continuing to ride this out. If you're an active trader on the short term trying to manage risk, I think you want to be raising those stops, controlling exposure, being diligent with new exposure. I think those are all very important concepts, which is going to hit everybody individually depending on what your strategy is in this market. So I think that's it. There's a lot of rants there and a lot of sort of tangents there, but the market again remains strong. We've certainly reduced exposure, more reluctant to put on new exposure here just because the risk to reward. I'm looking at some different, it's tough to find some stocks that haven't just completely ripped faces off to the upside. I can't very easily buy those names as we're going through earnings season. So for me, I have a higher position of cash on now, waiting to let this market settle in a bit more, let some more setups emerge, get through earnings season. That's certainly the way I'm approaching things right now after the strong early couple of week run, really trying to just sit back a little bit and wait and see. So that's the S&P 500. Let's look at the IWM. You can see here 1.3% strong. This was the leader here on Friday, really outperformed the rest of the averages, but you can see on the week it only finished up 28 bips, so it just went positive here thanks to Friday's strong session. It was underperforming. It had this big ugly kind of bearish engulfing outside bar here on Tuesday, and then we kind of hovered around these lows, but we snapped back today. Again, you can see MACD not quite as high as it got in December, but it is trying to get back up and trend cleanly to the upside. So I think looking at these prior highs here next week around 159 or so, getting follow through, that's that's going to be interesting to see how the Russell 2000 acts coming into the week on Monday. And then finally, the NASDAQ 100 looks similar to the Qs. We had this kind of a stall day here on Tuesday, then we rebounded Wednesday and crawled higher, closed at highs Thursday and Friday. Excuse me. So that's the market environment overall. Let's take a look at some other major markets here. We'll go to TLT, which sellers still remain in control here. We're starting to get a theme. We've been saying this now for the past couple of weeks. We're at this important level, though. This is a level that has not been broken since really going all the way back to April, May of 2017. And even before that, it was more so in March when we were banging our heads up against it to break out to the upside. You can see we're coming back down. We're still above last week's lows, but this is a dangerous spot as we continue to hammer against it. The more times we test support, the more likely we are to eventually break through it. So TLT will be looking, it'll be on test, basically heading into next week. Can the bulls defend this line, or do we ultimately break through and finally get a more meaningful drop here in bonds for TLT specifically? Go to gold next. You could see still holding up, very resilient here. Had almost a 0.5% to the upside here on Friday. If we look at the weekly progress, it was down. It basically spent the entire week chopping around, which it deserves given the fact that it's had 5 strong weeks to the upside here. This is the first pause week. It was only down a 0.5%, basically an inside week, or was it inside week? Yeah, it looks like it was an inside week. So it'd be interesting here. I'm still interested in this market, in this sector, in this group of stocks, all things considered. Looking at it, I'd like to see it cool off. I'd love to see a pullback, but I'm not sure we're going to get that. But for now, I'm still watching it. Still like the long thesis here, but not ready to pull any triggers just yet. Silver, similar situation here. Finally cooled off a bit this week, down 1.35%. Again, I still don't like the setup as much as gold, but I do recognize that this $16.30 level is a big level. There's a lot of supply carved out here from late 2017. So I do think we could start to really ignite if we started to break above 16.30. So I'm paying attention to it. That might actually be a clean spot to get involved in this market in the next coming week or so. If silver can base out and then surge through there, that would be an interesting setup I'd be paying attention to. Oil next. If we hit USO here, you can see this one cooled off just a little bit, down 1.17%, which has also been off to the races all of basically the last 5 or so weeks. It's testing the 8-period moving average. Bulls have been in control here. The trend remains higher on multiple time frames. So this is a market where dip buyers are very likely to be interested and waiting for, some type of more meaningful pullback correction or digestion to set in here could present a nice continuation pattern opportunity if this trend is to continue. And finally, for commodities, natural gas here, you can see 1.66% to the downside. We had that really high volume week last week as we broke out basically above this the highs here from the start of the year, right around 24.25 or so. We broke out on heavy volume. We see the volume coming in. We're starting to cool off a bit here. It's a little bit sloppy, right? The longer term structure of natural gas, right? It's just down, to the right and lower, which is not a good sign traditionally to be trying to buy that type of market. But I do again think, similar to my thoughts in last video, that we are trying to carve out a bottom here. This does look like there's evidence of some capitulation and some good volume coming in, but it might not be an easy, quick turnaround V-shaped rally higher. It might take another kind of retest down at these lower levels and just more sort of messy price action. So I'd be a little careful there. I think if you're a shorter term trader, you probably get a lot of volatility here. From a swing trading, I still don't see this setup just yet, but I do respect and like this high volume sort of quick action off of these lows. So that I think covers all of the major markets here. If we get into some of the individual sectors that make up the market here, XLV is on fire this week, 1.87% to the upside. Remember we talked about this breakout above $84 back here to start the beginning of the year. It's gone, just accelerated higher. A lot of the market has, but this really has helped lead us to the upside here. It is fairly stretched in the short term, so be aware of that. However, there is a tremendous amount of strength here. Some individual stocks may be setting up better than the XLV outright, so make sure you pay attention to those names. Staples also really moving pretty nicely this week as well. Nice breakout bar, 2.5% to the upside. Take a look here. Went 4 or 5 weeks just moving sideways, really tight, digesting through time, no major pullback. It's basically your ideal consolidation. And then you saw this large range expansion this week, 2.5% to the upside. That looks pretty good here for higher prices. Not the highest volume and maybe a little stretched in the short term, but constructive nonetheless in the short and intermediate term. Semiconductors, I think, were interesting. Semiconductors here, remember, had this almost 10% pullback here from 105. If we're looking at the SMH, you could look at the SOXX too, but from about 106 all the way down to a low of $96, so almost about a 9 or so percent pullback here. Carved out this sideways range. It rallied up to here. Remember, in this video we talked about this scenario again, thinking about all the possibilities that as this started to this had this underperformance these back-to-back days here relative to the rest of the market, and we said, look, if this decides to roll over here, this is a bearish development. If we have a lower high that gets put in and we start to roll over. That never happened. I mean, it never materialized. The very next day here on Thursday, we basically started to stabilize and then rally ourselves back up, and now here we are at new highs. So that lower high scenario did not play itself out. If we look at the weekly chart here, you can see we are now back above, closing above these November highs from 2017. So this trend is very much back in motion. Let's look for that follow through, right? If you're looking for confirmation, you'd want to see us hold above it next week. So you can pay attention to that if you are interested in playing in that sector. XLK, also, very similar to the NASDAQ here, continues at new highs. This is technology. And then finally, financials also participating. It's tough to keep a market down when you got financials, you got technology, healthcare. Those are some big names. Those are some risky names. Well, not financials necessarily, but that is some large makeup of the market, and those things all hitting new highs is a pretty good explanation as to why the averages are where they are. So financials again look pretty strong here, making new highs. Many of these companies reported, or the larger banks already have reported earnings. Wall Street, they always beat estimates, but it's the reaction that we always pay attention to, and so far it seems to be constructive based on the reactions we saw. Some of the sectors that are cooling off a bit here, energy, past 3 or 4 days, nothing wrong with it whatsoever, but on a relative basis, it is cooling off a little bit compared to some of those other just very heavy, very hot sectors like healthcare, technology, semis. You can see energy is back to the highs here from 2017. Remember, the highs were made right at the beginning of 2017, and we've rallied right back to them in about a quarter of the time it took to trade from 77 all the way down to 62. We went round trip 62 to 70 in about just 3 or 4 months, and it took the entire 9 months, 10 months to get down here on the way down. So we did basically round trip. We topped off right in here, pulling back a bit, a little consolidation, not a bad thing whatsoever. And industrials cooling off just a bit here for the past 4 days. Maybe good rotation candidates if this market wants to continue higher. 4-day pause, then continue. That's what this market tends to like to do. And on the downside, it's utilities. Utilities continue to see some very tough price action here. It continues to slice through support and just hang out near lows. The weekly chart is more concerning now as the MACD really rolls over into negative territory, and you can see there's just no bid right now in XLU. It's broken through support and it's just hanging down here at this nice round $50 level. I mean, the one interesting note here is just the acceleration in volume, the pickup in volume here. So, if you're trying to carve out some type of short-term low or capitulation low, it is good to see that volume starting to pick back up. So maybe something materializes here for some type of bounce, but XLU looks to be in a pretty tough spot. And the IYR as well, which this here on a longer term pattern looks pretty ugly here after breaking down from a 12-month kind of channel to the upside. We broke through that to start the year, really, at the end of last year to start the year, right around this $80 level or $81 level, and continues to trade near the lows. It was up on the week, but still in a tough spot, all things considered. So that's the recap for this week. A little bit long, but congratulations if you guys made it to the end. Thanks so much for watching. If you like the videos, first time watching, do subscribe to our YouTube channel if you like them. We do these about twice a week. I think that's it. So enjoy the weekend, and I'll talk to you guys on Tuesday.